Good morning. Welcome to Rajya Sabha Television. I'm Frank Pereira. This is indeed a big day. All eyes on the Finance Minister, who will present his maiden full-fledged budget in the Lok Sabha later on today, in just about a couple of hours from now. Of course, all eyes will be on the Finance Minister. Even the stock markets are open today, keeping in mind what's going to happen as far as the budget is concerned. Welcome to this continuous coverage right here on Rajya Sabha Television. We're going to lead up to the budget presentation to take place later on in the day, of course. And to do that, I have with me a panel of guests here in our studio who will talk about what to expect from this budget and what is it that you can look forward to as far as Arun Jaitley's budget is concerned. Joining me is Himanshu Vats, Senior Editor, Economic Times. Also with me is Birendra Prasad, Head New Initiatives, MRC, Faridabad, and Professor Praveen Jha from the JNU. Good morning, gentlemen. Thank you for joining me on the program. Professor Jha, I'd like to start with you. What do you think the expectations really are as far as this budget is concerned? Several expectations are extremely high, and everyone wants a piece of the pie.
Certainly, expectations are running very high, but my sense is that it would not be one of those, big bang, make or break kind of thing and so on, precisely because of the structural conditions as such. Both in terms of what is the situation in the economy, both domestically and externally, and resources of the government. If you take everything into account, then I think what has been said in the economic survey yesterday, let me just quote from that. It says that what India needs is possibly a persistent, encompassing and creative incrementalism. So forget about any big bang. I mean, I don't think any of that is going to happen. It possibly will be more of a vision statement, as we saw in the railway budget. Railway budget didn't really talk of resources at all.
Yes.
Right? But so I think we probably will see something similar. In terms of some major initiatives, possibly, there would be things to ensure that some of the irritants in terms of doing business, how those can be addressed, because that has been one big theme, one big idea that the government has been talking about, Prime Minister, Finance Minister, everybody. So, for instance, minimum alternate tax, there might be something there. Make in India, you might see certain kinds of incentives there. Infrastructure, there will be a lot of emphasis on that. To what extent it translates into resource allocation remains to be seen. On the whole, I see it as a sort of a business as usual kind of story. Between what was, let's say, the last budget of UPA, the interim sort of initiative of the current government, and the budget that we're going to see today. So my sense is that we should not be looking for major surprises.
Yes, we should.
Okay. Yes, so that would be my opening kind of remark.
Okay, Himanshu, do you agree with that? I mean, don't expect anything surprising, don't expect anything big, but be happy with what you get.
I'll partly agree with that, but and this is correct. I remember Arun Jaitley was at an event where he actually said that everybody comes to me and say, do something bold, do something big. And I ask them, okay, give me a suggestion. And they say, I'll come back to you. And I'm still waiting for them. So, to that extent, yes. But at the same time, that this is the first major economic policy event for this government. The very first budget, we can let it pass. We couldn't have expected anything. But certainly, in terms of expectations and the political realities, even if nothing major is done, it will certainly be dressed up very well. It's going to look good. And as far as industry is concerned, I would expect some big initiatives to ensure that or facilitate companies to be able to borrow money from banks and start investing. Because without that, you are in trouble. You already have the advantage of low inflation, low oil prices, commodity prices. The outlook for commodities is also fairly moderate. So if you don't use all this and do something at least slightly big now, then it's difficult. And it's also you still have 4 years and 4.5 years of this government's tenure.
You know, you spoke about industry. Interestingly, our correspondent Rajkamal Rao is standing by at CIA. In fact, let's quickly go across to him at the Confederation of Indian Industry and see what the industry really expect from this budget. Rajkamal, over to you. What does the industry really expect as far as this budget is concerned?
Frank, there is all around optimism and hope because of the recent economic survey and the GDP figures that we have seen. The revised GDP figures, I must say that they are expecting the finance ministers to project growth figures up to 10%, which is double-digit figure that this government is talking about. But they are very keen about the results that were that came and the report that was tabled in Parliament yesterday on the economic survey, which says that the government must allow investment, but only where there is some kind of hope for returns, clearly indicating that government must reduce the burden of subsidy. To one liner here, that the PDS subsidy which were laid out in economic survey and the other subsidy which were given in economic survey give clear indications that this government has very less room to play and they cannot go on increasing subsidies, but they will have to invest on their pet projects like Make in India, infrastructure development, especially port-led connectivity, road connectivity, and the kind of infrastructure projects that this government has been promising will be under keen watch by the industry, which from whether it is CII or FICCI, they will be keenly watching on what kind of indications the finance minister will give and what kind of incentives that he will promise the industry to come and invest, because the promises have been made by finance minister and prime minister while he was campaigning and after he was elected to his office. But a lot of people in industry have raised their voices in the last one and a half month that the promises that were made by finance minister and prime minister were not translated on the ground. Several banks have stopped lending money to all those industrialists who want to invest in infrastructure projects. They can't, because the return on investment is not assured for them, and they want some concessions, and it is expected the lines of road says and others says they are also expecting they may be high, because government needs a lot of infrastructure projects to take to some logical conclusion where state governments and centre both can earn some money.
All right, do stay with us, Rajkamal. I'll come back to you in just a bit. Of course, Virendra Prasad, very important and valid point there being raised, and it is true. In fact, there are several members in the industry who've raised their voices in the last couple of months, of course, saying that the government has not really fulfilled some of its promises. Do you agree with the industry saying that, you know, the promises have not been met and more needs to be done, especially as far as infrastructure is concerned?
Yeah, of course. I mean, if you talk of infrastructure sector, I mean, they are not wrong. They are not fully wrong, I would say, because industry is having a lot of expectations. When this government came into majority, and this is the first government after a long gap, I would say, that this kind of majority government has witnessed, right? So industry is having a lot of expectations. Manufacturing sector, and our prime minister, he has emphasized so many times that we are going to take care of manufacturing sectors. It is going to yield a lot of employment as well, right? And those expectations are, this is not the right point to comment on those things, whether it is actually fulfilled or not. But yes, industry has started feeling disappointed, right? They are feeling disappointed.
Indeed.
Yeah. And so far infrastructure sector is concerned, one of the opinion, this is my personal opinion, I would say, let Arun Jaitley, our finance minister, right? He has emphasized so many times that we will take care of salaried class, right? Infrastructure bonds. One time this was permitted for tax exemption, right? If this kind of policy government is coming with, I hope this is going to give a lot of boost to infrastructure sector. And let's see what happens, what is there in their boxes.
Indeed.
Right.
Himanshu, I mean, the infrastructure sector indeed requires a boost, and that's something that we need to concentrate on. Do you think that the government is going to take this extremely seriously this time around?
I would expect it to do that.
Yeah.
You know, one of the things mentioned in yesterday's economic survey was that how the public-private partnership model has not worked very well. But at the same time, it said, however, this needs to be maybe fine-tuned, but private investment remains pretty central to rapid infrastructure development. It also made a point about how certain big projects which were bid out too aggressively, you could have allowed them to perish rather than trying to revive them. So the message for need of infrastructure development, need of private finances for that, and the need of discipline, and even punishing reckless bids. Because if you make a reckless bid, you grab the project and you're not able to do it.
Yes.
You have denied many other companies from doing it, and infrastructure is not being developed. And then you get into litigation and court cases. So I would expect a lot of focus on infrastructure. And there will have to be ways to get private capital into it, maybe pension funds, insurance funds. There could be some talk of, a better debt market, long-term financing which is required, without which, it's very difficult to fund infrastructure. There are going to be very severe fiscal constraints. We've had a Finance Commission report which talks about adhering to fiscal targets, which means, this whole debate that, okay, let fiscal discipline slip for some time and let's spend heavily public expenditure. I don't think that can happen too much.
Praveen Jha, interesting points there made by Himanshu, of course. It looks like the infrastructure will get a boost this time around, but remains to be seen. Of course, we'll have to wait for Arun Jaitley. But then what do you think are the other key sectors, other key areas
Let me just say a word on infrastructure. Again, I think what Himanshu said earlier, that there will be a very well-dressed kind of budget. So in terms of intent, certainly you will see a lot of talk and so on. But the real issue is, where do you get the money, right? The public-private partnership experience has not been very good, as has been acknowledged by the government. How do you improve that? Of course, I agree with Himanshu, if you can get something going there, that possibly is the way out. Because our tax GDP ratios are among the lowest in terms of comparator countries.
Right.
I do not see how you are going to increase that in this budget. Given that, it seems very difficult any scope for increasing public investment in infrastructure. Right? On the other issue that you said, well, what could be the other things that might be there? My sense is some of the schemes which generally have been criticized for leakages, etc., they might get whittled down. Okay, on the grounds that we will improve the functioning of these, so effectively on the ground it will not going to make any adverse impact for the beneficiaries, right? So if we can reduce leakages, etc., by let's say 50%, we can easily cut it down by 25%, allocation and so on. So maybe Mahatma Gandhi National Rural Employment Guarantee Act, you might see that there is no significant increase in real terms. If anything, you might see some decline there. On the grounds that there has been now, the government has already adopted the 14th Finance Commission recommendation, not in entirety as yet, but certainly the most important recommendation, which is the devolution increases from 32% to 42%. So on that ground, that now the state will have more resources to take care of a number of sectors which are either in the concurrent list or where, even if it was in the state's list, the center has been playing an important role. You might see significant compression of outlays from the union government. These are going to be, my sense is, some of the important sort of maneuvers that this budget might offer.
Indeed. It is a fact. It is a fact that the government does not have money. The government is desperately looking for funds, trying to get in money from all possible ways to try and, invest it back into the country. But then, Birendra Prasad, there are several pet projects as far as this government is concerned, projects that are very close to Prime Minister Modi. How do you see the Finance Minister addressing those projects? Do you see a boost for those projects in particular?
Of course. I mean, the Modi government has a lot of focus on infrastructure sector is one, manufacturing sector is two, right? And I'm sure a lot of boost would take place in the area of infrastructure sector. I totally agree with my panel member. There are certain plans, right? And that was absolutely my personal opinion when I said infrastructure bond tax exemption limit should be enhanced, right? That way, what our panel member was talking of public-private partnership, right? So that way public money would be coming to government, right? That is a way of revenue model. I mean, what 5-year lock-in period could be there, and that way investment is possible for government. Money is possible, right?
Yes.
Right. And manufacturing sector, to my opinion, I hope it would be a bit populous kind of budget. I'm sure.
All right, another colleague of mine, Kriti Mishra, is standing by at the Federation of Indian Chambers of Commerce and Industry, FICCI. Kriti, good morning. A big day as far as FICCI is concerned as well. There's a lot of activity there, I understand. Take us through what's happening there and take us through the expectations really as far as FICCI is concerned.
Very good morning, Frank. Corroborated by the optimistic economic survey unveiled yesterday, there is a lot of clamour for big bang reforms and multi-crore tax cuts. So the industry is very hopeful that Finance Minister Arun Jaitley will unleash several proactive measures to kickstart investment, promote manufacturing and really propel economic growth of India and improve India's overall competitiveness. But I was talking to a few of them. So they said that the economic survey very specifically highlighted yesterday that India's tax estimates are overestimated and there is a need to increase revenue generation. So they said that this has hampered their expectations of mega tax cut. Back to you, Frank.
All right, indeed, mega tax. Those are the expectations there as far as FICCI is concerned. Big bang reforms. Himanshu, are we going to see some big bang reforms this time around?
See, I'll put it this way. If you look at the economic survey, one point is the incremental approach, which our panelists said. The same economic survey also said that we've reached a kind of a sweet spot.
Yes.
There's scope for big bang reforms. So, one should not get carried away by, micro points within the survey. Right. The same survey also says, where it is talking about a unified agricultural market, it says, there's need to have a unified market, there's need to have private investment in warehousing, there's a huge gap in investment and infrastructure, and this gap can be met if you liberalize foreign direct investment in retail. Now, that's a big bang reform.
Yes.
And the survey says it. But the thing is, as we've seen in many past surveys, that there's a lot of good economics from different sources that creeps into the survey. That's not necessarily going to be economic policy. So it's really, one has to wait and watch what actually is done.
Is hedging his bets.
There were several small schemes announced last time around, 100 crore schemes, I think 100 of them. Himanshu, how many of them were? There were several small schemes.
29 schemes which were less than 100
Less than 100 crores. And, where did all those schemes go? We didn't see them fructifying at all. Are we going to see some more of those announcements this time around?
You see, given the nature of budget making and the perception of everybody who's in some sense affected by it, such things will not disappear completely. Right? So you have to name some schemes in the name of your let's say,
Searching for the right word.
I'm just, yes, exactly. Those who you probably think have been your ideologues and etc. So some of those you will never escape. Right? But certainly what had happened in the last budget was possibly an overkill. Very large number of schemes, resources were really very thinly stretched. That doesn't help, right? Even the finance minister and the government knows it very well. So probably you will see, if at all, an attempt to maybe reduce the numbers of such schemes or such announcements, at least in this budget. Maybe trying to identify some of the major ones from the last year's budget or last budget, and then try and build on that. So some attempt at trying to find a midway between, what was done last time and consolidation and fewer schemes, etc. So with respect to schemes, etc., that is what I would anticipate. Right? But in terms of, whether the focus would be on those or really what have been the pet projects, as you were saying, the attempt would be to convey that the pet projects are far more important than those minor ideas and initiatives. And that's sort of the sense which one is gathering. In terms of, again, big bang ideas, even with respect to taxation or what can be done for industry and so on, you see, if you talk to the industry at large, there is an optimism which continues. There is no question about that. There is a feel good, positive sort of sense and so on. But you start asking them, and some of them have come out very openly. Mr. Parekh, for instance, who said that almost nothing has happened.
Yes.
Right? So you have similar
He's been
voices.
vocal in the past
Yes,
as well,
yes,
and he's probably
yes.
one of the first ones to come out and speak whenever there
Yes.
is something happening. So he's done that this time around.
True,
too.
true.
So we're completely out of time on the program. We just have about a couple of minutes to go, but I'm going to take closing comments from you. What do you think, that we look forward to as far as this budget is concerned? Your closing comments, Virendra Prasad.
In totality, I would say this would be in favor of the people. Right, in favor of the people. Because government cannot afford to disappoint people. They have
Yes,
got...
but the government also has another 3.5 or 4.5 years remaining, like Himanshu said. So they don't really have to please the people.
Very recently, they have miserably failed in Delhi. Right.
So you're saying it's going to lean towards populism and it's going to be a populist
shadow
budget.
effect will take place,
Okay.
I'm sure.
So you're saying it's going to be a populist budget and maybe also something in it for Bihar as well, maybe.
Could be.
Okay. Himanshu, closing comments from you?
Yeah, I'll frankly not expect a populist budget. It makes good political sense also to build the foundations to give you room for populism in year 4. So I would expect, the kind of budget we saw for the railways. You didn't have any obvious populist scheme
Yeah.
or anything going for the railway minister's constituency or state. Likewise, I will not expect any populism, but it's going to be articulated in a very, very pleasing way.
We could probably expect a populist budget in 2018.
Yeah, well, I would expect that. Yeah,
for sure.
But if you want
That is for sure.
But if you want to do that, you have to build strong foundations
Indeed,
this year and
indeed.
next.
And the strong foundation is going to be built this year, is what you're saying.
Yes.
Closing comments from you,
For
Professor?
good or for bad, I think what you will see is an attempt to put the foundations of the economic philosophy of this government in this budget. One can agree or disagree with that philosophy, that's a separate issue altogether. But whatever it stands for, hopefully all that will be translated into the budget document, because as you have been saying repeatedly, this is the first full budget and the government has 4 more years to go. If it does not do it now, when would you expect it to do that? So essentially a number of things that it's been harping on, it's been talking about. Again, I'm not being judgmental on it, but I'm simply saying that in terms of its core ideas, for instance, maximum governance, minimum government, right? So you will see attempts of that kind to sort of basically put in place this argument that there is too much of government expenditure or consumption and too little government investment, right? So there will be an attempt to try and put all this together and sort of set the foundations of its vision.
Indeed,
that's how I
that's
see
the consensus that we reached here in our studio. Expect a realistic budget, something on the lines of the railway budget a couple of days ago. Do not expect a populist budget, is what our panelists are saying. Thank you so much, gentlemen, for joining me on the program this morning and trying to decipher what's likely to happen during the course of the day. That's it from me. Thank you so much for watching. Stay tuned for much more coming up on the other side.